Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hi, my name is Marco Santarelli with Norada Real Estate Investments, and I am your host today on the REI Classroom. We're going to talk about why to invest out of state.
This REI Classroom real estate lesson is sponsored by FlipNerd Investor Coaching, your blueprint to investing success.
The simple fact is that the best real estate opportunities are not always found in your neighborhood or your local market. You may have heard that saying, all real estate is local. Well, the truth is that the United States is made up of over 400 markets, and some of these markets are going to be more favorable than others as they transition through their individual market cycles. So that means at any given time, there are going to be markets that offer you better opportunity in terms of cash flow and or appreciation potential. Well, there are many advantages to investing in markets that make more sense, and the first one would be lower prices. Now, don't get me wrong, I don't mean lower prices mean or suggest cheaper is better. Every market has its own price range of high and low price properties. The median cost of a 3-bedroom house in San Diego, just south of me here, is a lot different than the median price in, let's say, Kansas City, Missouri. So with limited investment capital on your end, you will be able to purchase more income generating properties in lower price markets than you could if you're in one of these expensive markets that we find along the coastal markets of the United States. Now, how can you leverage your capital? And you want to do that to increase your cash flow, your rate of return, and your overall number of properties that you can purchase, and that leads to diversification. So higher and better returns. When you compare what I call the rent to value ratio in your market and you compare that to other markets around the country, you will quickly start to see where properties are overpriced in terms of the value related to the rental income. And this is a very good quick metric. So the results of doing this will often show you where you'll have lower cash flows and lower returns because those lower rent to value ratios just don't make sense. So let's take an example. San Diego, California. If you have a median sales price of about $500,000, I'm just rounding these numbers off, $500,000 and a median rent of about $2,500 a month, that gives you a rent to value or RV ratio of only 0.5%. I like to see about 0.8% or above. The higher the better. We shoot for 1% here, but you do want to be over 0.8. So at this time, we're just seeing very low cap rates in these markets and low rates of return. So the second big advantage here is better cash flows. And we've just touched upon this, but often you will see your cash flow increase by investing in these markets that make more sense than a market you may be considering because it's convenient for you or it's just close by. Again, looking at markets from a rent to value perspective gives you a quick way to compare one market to another, and it gives you a good idea of its potential. And then the next advantage is diversification. You normally hear the term diversification from financial planners and stockbrokers. Why? Because that's really how they function and what they know. But you don't hear the term used very often when it comes to real estate investing. The goal of diversification, regardless of the investment, is to reduce your investor's overall risk. You see, diversification in real estate is easily achieved by purchasing income-producing properties in different markets around the country. And in some cases, investors even purchase property in other countries. But by creating a real estate portfolio of income-producing properties across multiple and separate markets, you actually reduce your exposure to risk. So because real estate markets don't move up and down in value at the same time, or at the same rate, investors can reduce and limit their risk through diversification. And finally, real estate investors should also realize that diversification tends to reduce both the upside and the downside potential of their portfolios. Now, this may sound a little counterproductive maybe, but remember, the reason investors want to diversify is to protect their real estate portfolio under a range of economic conditions, because you don't know what's going to happen a year or 2 years from now with the election or with the economy. So consider doing a simple and quick analysis in your own local or favorite market and compare it to a few other markets to see where those best opportunities are for cash flow and rate of investment or return on your investment. And you can get a quick idea by just doing a simple rent to value comparison and look at the purchase price and the affordability within that market. So this was a very, very quick overview. We have a lot of free information on our website that goes into much greater detail about everything I just talked about. And you can find that at our website at noradarealestate.com, Norada realestate.com. Thank you.
The FlipNerd Investor Coaching Program is America's most robust real estate investor training and designed for your success. If you're ready to roll up your sleeves, ready to take personal responsibility for your own success, and ready to dive into a world-class instructional coaching program that provides you step-by-step instruction to help you achieve financial freedom, then you need to visit flipnerd.com/coaching to learn more. Spaces are limited. Whether your goal is to simply get started or to take your business to the next level, you may be a fit for our life-changing program. Learn more today at flipnerd.com/coaching. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of flipnerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of flipnerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at flipnerd.com. Please check out the FlipNerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at flipnerd.com/shows, or simply search for FlipNerd in the iTunes Store.